How bad will things get before they start to get better?
We're already seeing improvement. I think the Q2 data and Q1 showed that. Um, we were expecting vacancy and availability to continue to increase this year. There was some optimism that there could be some flattening throughout the year, depending on how the economy goes and the direction of interest rates. Those are pretty big drivers. But if you look at tenant touring demand, that's up. Leasing activity is up. We're starting to see a segment of tenants that's growing, the groups that are in AI in particular. So, you know, existing trends are continuing, but it feels like we're getting close to the bottom.
Without AI, would it be a very different picture?
It would be a different picture, absolutely. We need to see much more than just AI to see a recovery. So AI, it is significant, but it's not everything. We're on a call it a 17 quarter run of negative absorption, right? Consecutive quarters of negative absorption. Um, and we're finally starting to see that kind of change course a bit. I mean, it's still negative, but it's a bit flat almost. So we're looking at that. We're looking at leasing activity. Renewals are still a big part of it. As tenants or as leases transact on a relocation, is there a downsize, and what does that look like? Um, Many tenants are taking a bit less space than they had previously. I think the composition of tenant industries that are signing leases right now has shifted a bit than prior to the pandemic. Tech is still there; it's still a big factor, but it's less of the pie than it used to be. Um, there's actually quite a bit of leasing happening right now with professional services and legal and what you might call traditional office users. Big tech is still sort of pencils down the biggest users. They're still going through or reassessing how much space they need after that giant run up of leasing in the previous expansion. So right now, the groups that are growing and growing fast are in the AI space. It's venture backed companies in AI, but we are starting to see some requirements of 100,000 square foot or more transactions on the leasing side, and that is reassuring that the market is beginning to improve. There's market chatter that there are pending large block leases in San Francisco. From an activity standpoint, the bottom was hit in the second half of 2023. After the sale of 550 Cal, and after and then some of the big AI leasing that we saw coming out of like late summer, early fall of last year. That's when things started to really pick up. Um, Rents are going to. That doesn't mean that we've hit a bottom on rents or we've hit a peak on vacancy, but that's when things started to change.
We just saw X announce that they're going to be now subleasing their entire space. What does that do to the market when big names like that make those kind of decisions?
The X availability is certainly going to affect mid market. There is an opportunity there, though. That's if a tenant commits to that space, that should provide much needed influx of workers to that part of the city on a daily basis. It's interesting. Before that was announced, sublease availability had been ticking down a bit for a few quarters, but obviously with that new space hitting the market, it's gonna push the number back up closer to the record of around 9.8 million square feet.
And for those AI folks that everybody's trying to get, are they looking for sublease space that's already done that they can just move into, or are
Yeah,
they
if you look at the deals that have signed, quite a few of them have been subleases. Absolutely, these tenants are taking space really in any building. There's no one type, right? Some of them are taking space in Class C brick and timber. They're in high rise office. It's pretty interesting that it's not just one segment.
Is there any sense that you can see ahead as to where we might get back to a more balanced market?
I think one trend you're going to want to look out for now that is emerging is end and extend, and that's on the leasing side. So examples of a landlord might want to just renegotiate the terms for a tenant right away with their current rent to get more term on the back end. I think coming out of the global financial crisis, you saw a lot of blend and extends, and that was sort of a similar strategy. But I would keep an eye out for that.
I see. So wanting that certainty even at a lower rent that you've got
Yeah,
someone.
but having that certainty that that tenant's going to be here for a few more years. I think it's all kind of part of the market participants understanding that there's a bit of a reset. You know, it took a while to get here, but it's happening. The highest quality view space in San Francisco has probably never been priced as high. Um, that might be getting those averages are probably getting pulled up or pushed up a bit by certain projects that are achieving pretty high rents right now. But yes, the spread between, call it commodity or Class B space, and that trophy view Class A space has never been higher.
Are you seeing what the breakdown is between a building that is going to be like an empty, complete redo and what that's going for price per square foot versus something that's filled?
One thing to consider when you read these headlines and they say, is any given building has sold for, 90% a discount compared to what it sold for a few years ago. If that building's empty today and it was full before, I mean, that's going to right there cause a huge difference in price. There's probably never been more opportunity in the market than there is today, for groups that are able to go in and buy and take that risk right now.
How is our office market doing compared to the Peninsula and South Bay?
I'd say Silicon Valley's faring a bit better than San Francisco. It wasn't as impacted by remote work. Sublease is still fairly high, but not at all at the levels that you'd see in San Francisco. Even downtown Oakland has its challenges as well. You can almost look at it like downtown San Francisco struggling, so is downtown Oakland and downtown San Jose as well, but to a lesser degree. The Silicon Valley also gets the benefit from a very strong sort of R&D market, and that market has fared better than your traditional office groups. Anything that causes friction in getting to the office in any way is going to be a factor right now. So using mass transit, a long commute, all of these things combined, are going to affect how many workers you get in the office. And I think there's an argument to be said that Silicon Valley being a more suburban market, they're benefiting from that.